now it's time to dive into the actual concepts that we're going to use for our trading plan. We're going to start all the way from the easiest and the most important concepts that we use, and then we're going to go into more advanced stuff, and in the next chapter there's going to be the refinement in order to find the best possible entries, the best possible trades we can have. First concept that we need to know, and it's one of the most important one, is market structure. Now if you have experience with retail trading, if you've been trading support resistance or any other strategy, you probably know what market structure is. So if you do know, then you can just skip it. We're gonna use breaks of structure and changes of character in order to mark structure. Now structure is a thing that is useful, but we also don't really need to view market structure as the only thing that moves the market, because we have order flow, which we're going to talk about in the next videos, and order flow is more important because it shows how there's more buy volume or sell volume. Market structure just shows us if the price and the chart is trending up or trending down. I do like using 4 hour to mark structure and only use the bodies of the candle, so we're not going to use wicks for market structure. The basic market structure is in a bullish trend. We have, I'm pretty sure everyone knows this, but we have higher high and higher lows. So this is a higher high, all right, and then we have a higher low. So when price is bullish, the structure is bullish, we create higher highs and higher lows in the market, as seen here. Now structure, like every concept that we're gonna use, we can use it on any time frame, starting from the monthly time frame all the way to the 5-second time frame. We just need to understand how it works. To correctly understand structure, we need to know how to mark the break of structure. The break of structure is just that when we break structure to the upside or the downside. Here, because we are in a bullish trend, we break structure to the upside because we're creating higher highs, and this is called a break of structure, which is we're gonna call break of structure, a BoS. So when you have a break of structure to the upside, that means price managed to create a new high in this case, and it set the higher high, and then we are going to have a potential retracement. So very important thing to note is once we have a break of structure, especially in the higher time frames, we're going to use this a lot. Once you have a break of structure on the higher time frame, as you can see here, 90% of the times you're going to have a pullback. So price is going to come down and create a higher low. We need to understand this, because if we want to take counter trend trades, we're gonna always wait for liquidity to be taken, or for us to have a break of structure on the higher time frames, or we have a mitigation week or a liquidity week, which we're gonna go into depth later. Now in a bearish structure, so same thing applies, but we're gonna have lower lows and lower highs. So again, really basic. I'm not gonna waste a lot of time on this, but a few key notes that you're gonna want to note down. Those are, as I said, so we have a lower high here, lower high, had a lower high here. So breaks of structure here, we have a break of structure to the downside and another one over here. I'm gonna show you some examples on the charts. Also, when we have, in order to have a valid break of structure, we need to have a candle close. So if it just wicks above the previous, let's say in this example, if this is just a wick above and then it closes here, that's not a valid break of structure. We need candles to close above the other one in order to validate the breaks of structure. Now the next concept we need to know is a change of character. The change of character is going to be the first break of structure basically in the opposite direction. So in order to understand changes of character better, we're also going to need to understand supply and demand, which is going to come in the next videos. But let's say we have this bearish trend here. All right, we have another lower high that we create here, and then price is most likely gonna come lower in order to create the next break of structure to the downside and create a new lower low. But however, if price comes here, it breaks the low, it creates the break of structure to the downside, but then comes back up. So we have the break of structure to the downside, we create the lower low. Let's say we hit a higher time frame zone, and then price decides to take the high that created the low. So every time we create a break of structure, we have a high or low who created the other one. So if we're bullish, then this is the low that created the break of structure and the new high. Same here, this is the low that created the high and the break of structure. So we need to take that out in order to have a valid change of character. So same thing here, this is the lower high or the high that created this low here. So for us to see a potential reversal, we need to see the change of character, which is for price to take out this high here. So once we take out the low, we create a break of structure, and then price has bullish pressure coming in and takes out this high. This is gonna be a change of character or a ChoCh. Again, if you've been studying smart money concepts, you probably know what this is, but just wanted to give a clear explanation, an easy one. So that is called a change of character. Change of character because it's been a change in the character from bearish to bullish. And an example here, we're gonna have something like this, where again we're gonna have the change of character here, because this is the low that created the high and the break of structure, and then we came below this low, we create the change of character. That means a possible shift in the market, in the order flow is coming. So in this case down here, we may be switching from sells to buys. So after we have this change of character, we could see a potential reversal playing. So then the most textbook setup is going to be price coming down, having confirmation, and then continuing higher. So we're going to go over those kinds of setups and multi-time frame analysis in a later video. Basically, when you have, let's say for example, a 4-hour change of character, then you're going to wait for the pullback, you're going to wait for order flow to realign in your direction. So in this case, bullish on the lower time frame. So let's say 50 minute, 5 minute, all the way to the 1 minute for more confirmation. And then you execute the trade to create the next break of structure to the upside. That's basically what market structure means. Now, to just show you how we market, let's go on the 4-hour. And it's very important to understand when we're bullish or when we're bearish. So the easiest way to mark structure is to remove the wicks. So you just go remove the wicks, and now you only have the bodies of the candles. This is a really good exercise to mark 4-hour structure or any time frame structure, but 4-hour is the one we're going to use the most. So let's start and mark breaks of structure. So you see here we are bullish, so this is the low that we created. Here you can see we had a change of character. We created a high, then price pulled back, created another low, another high, another low, another high. Price came to retest this, then created a new high, then came back down. If we look on the daily time frame, it's going to be way easier to spot because there's less candles. So here you see high, break of structure, higher low, then a new higher high, then a new higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and so on. So it's a really basic thing. And you can go all the way down to the 50 minute to spot that also. So you see how clean it is. Trading and structure is all about how clean price is. Looking at the recent price action, so for example on EURUSD, I am in a buy position from this low. The reason for that is because market structure is still bullish. You can see here, this is the high, the current high in the market. So which low created that high? This one right here. This is the low that created that high. Now, in order for me to switch to a bearish bias, I will need to see a strong close below this low. Now, price did close below this low, but closed by a few pips, and you're gonna see it just traded low, and then it came back up. And if we go on a higher time frame, daily also, you see daily, this is the high and the low. It did break structure, but it also retested this area here, which is our demand zone. We're gonna go into that in the next few videos. But if you go down, let's say 1 hour, you see the low on the 1 hour was there and it was respected. And what did price do? Started creating bullish order flow, came back to retest and then pushed up. Now we had retracement and now we're gonna push up again. Why? Because higher time frame structure is still bullish. Now it's pretty difficult at first to spot the lows and the highs and the points in the market that's going to be respected. This easiest way to do that is if you are very bullish, how we are on EURUSD. You see how price has been really trending bullish. This is the low and we have another low here. We have another, let's say, low here, another low here. We have a lot of lows that have created bullish pushes in the market. However, this is our important low that created this high. So once we started having the pullback, in order for us to switch bearish, we will need to see a really strong bearish close below this low, so then we can have the pullback and then the continuation. Again, just pay attention to every information that I give. You'll understand everything once we put the trading plan in action. You're gonna see how easy trading is, but you need to understand everything that moves the market. So structure is one of those things. If we enable wicks again, you'll see how it just overcomplicates a lot of stuff, especially in these areas. But once you only look at the bodies, you're gonna see everything much clearer. Here was a really good setup. We had the retest to New York low. We're gonna also talk about that. And then price with news came really high, had a retracement. Now we see 50-minute market structure high, and then okay, came down, and now we had a break of structure to the upside and prices started to go bullish. If we have the retest, then we can safely look for a buy. So that is a market structure in a nutshell. It's really easy to mark. We're gonna do more exercises on market structure in the future, but it's not really that complicated. We just need to understand in what type of market we are. So people confuse this a lot, especially smart money traders. They confuse price a lot because they tend to look only on the lower time frame. So because they're taught to look at only at 50 minutes, 5 minutes, 1 minute, seconds time frame, they lose their perspective on the higher time frame narrative. This is an important key lesson that we're going to have, the higher time frame narrative. Higher time frame narrative means that price always has an objective where it wants to move. It always respects that, and we need to know what that is so we don't trade against the trend. So while 70% of retail traders were looking only for sells ever since price came here, so in this area, they were only looking to take sells because they missed a big bullish move, and they thought after we took out this low and we started to see some bullish pressure, they thought we are in a bearish market. But if you just look at the bigger perspective, you can see daily has still been trending up. We didn't really have any big breaks of structure to the downside on the daily in order to confirm our sell bias. You see how even here respected perfectly, higher highs, higher lows, higher highs, higher lows, higher highs. Now we closed a little bit below, but still at this level. So that's why I said I need to see a bigger close below in order for my sells to confirm. Until then, I've been buying EU on any pullback I caught. I did take losses mainly just because of timing, but you see how we caught and also call this trade in the Discord group from that low, the buys, which are currently 40 pips in profit, and we're continuing to hold the trade to complete that higher time frame narrative, which is for price to hit and create a new higher high. So again, market structure, pretty easy to understand, don't overcomplicate it. Use the higher time frames only for structure. So we're only going to use daily, 12 hour, 4 hour for structure, nothing below that. When we're looking for an entry on the 50 minute, we're going to pay attention to breaks of structure and changes of character, of course, but that's not going to be the big part of our training plan. The big part of our training plan is just going to be focusing on sessions and executing based on them, and that's it. So I'll see you guys in the next video.